Thank you for attending today's webinar. Good afternoon. We're going to be talking about understanding your Medicare remittance advice. My name is Mary Reyes, and I am the Director of Operations here at TAD. It's my pleasure to present this webinar for you today with Alexandria Rochko. She's one of our accountants here at TAD. She has been in the home care industry for over 15 years. TAD was founded to provide an option for home health agencies to outsource their billing, accounting, and consulting services to industry experts. We have a lot to share with you today, so we're going to get started. But first, a couple of clearing technical things to discuss. All of our attendees are in listen-only mode. Please feel free to send your questions throughout the webinar via the question box that should be on the lower right-hand side of your screen. We will answer those questions throughout the webinar topics, or we also have a time at the end of the webinar to answer any questions at that time that may or may not have been addressed during the webinar itself. At the end of the webinar, we will post all of our contact information, so if you're interested in more information about TAD or have any questions about the content of our webinar today, feel free to send an email and we will respond to you. Also, at the end of the webinar, a questionnaire will be popping up in your screen, and we really appreciate it if you'd answer those questions and provide us with any feedback you care to share. We do review those questions and the comments, and that's how we can know whether there's new topics you'd like to hear about or if there is any things we need to improve on our services. So without further ado, I'm going to turn the microphone over to Alexandria. Alex?
Thank you, Mary. Thank you. Today we will be talking about Medicare remittance advice for home health. A remittance advice, or RA, is an explanation of the payment and adjustment details sent from an insurance provider. You receive a paper or electronic remittance advice from any payer that processes your claims. Today, we're going to be focusing on the remittance advice that you receive electronically for your Medicare claims. Your MAC processes your claims and then produces a remittance advice that explains the payments and adjustments of those claims. Remittance advice will be generated for every day that claims processing activity occurs. If the claim processing activity results in a positive remittance, a deposit is made into your bank electronic fund transfer, other words, EFT. If you are not set up and enrolled for EFT, you will receive a paper check in the mail. If that same claim processing activity results in a zero or negative remittance, obviously there will not be a deposit into your account, but you will still receive a remittance advice as an explanation of the payment decision for that particular billing cycle. Now, electronic versus the paper remittance advice. Most providers receive their RAs in electronic format. However, standard paper remittance advices are still available. Advantage of electronic RAs and ERAs are faster payment notifications, faster account reconciliations, electronically posting if your software supports electronic posting, less paper, which can result in lower operating costs. Now, electronic remittance advice are sent to providers from their Medicare Administrative Contract, or MAC, an 835 electronic file. You can access your electronic remittance by using a Medicare support translator software called PC Print. PC Print is available for free from CMS. The samples we will be reviewing were produced from PC Print. Many management software have the ability to convert the electronic format of the 835 file to a user-friendly format that you can review and read on your computer. Printed copies from the management systems may look different than our examples, but should contain all the same information. To better understand the remittance advice, I would like to review a couple of items related to billing for home care. As you know, home health care providers are paid episodically by Medicare. Medicare episodes consist of 60 days of care and are billed as a wrap and a final claim. OASIS assessment creates the HIPPS code, which determines the payment value. RAP stands for Request for Anticipated Payment, and it is submitted at the start of the episode. Your RAP payment will be 60% of the HIPS code value on start of care episodes and 50% of the HIPS code value or recertification episodes. Now, the final claims are submitted at the end of the episode. You need to submit your final claim within 120 days of the episode start date, or your RAP payment will be reversed. Your final claim payment is determined based on the information actually submitted on the final claim. So, when the final claim is processed for payment, Medicare will first reverse your RAP payment, then pay the final claim based on the services that were reported on that claim. If you are unfamiliar or need a refresher on the general billing practices for Medicare home care, we offer another webinar on that topic. Watch our website for future dates and topics.
Alex, and in fact, next month, that is our webinar scheduled, is the Billing at a Glance, which summarizes the billing practices and goes into a little bit more detail on these filing requirements. So if this is an area, look at our website and that you can register for that website any time right now, or that webinar.
Great, thank you. Now, types of bills. The next thing we want to review are the types of bills that you will see on your remittance advice. In addition to the wrap and final, there are other types of bills that affect your payments. So we're going to quickly run through them. Okay, a 322, wrap or request for anticipated payment. A 329, final or no wrap LUPA. Now a 328, reverse or payment or a cancellation. A 327, adjustment that has been initiated by the provider. 320 is a rejection or claim denial. 32G or 32I, internal adjustment initiated by Medicare. We're going to start with the detail pages of the remittance advice and then the summary page information. This next screenshot shows the header information listed on the second page of your RA. We'll first review the individual columns and what the abbreviations stand for, and then we'll go over 3 sample remittance advices and talk about different claim payment scenarios that are listed there. Column 1, patient name. Your patient's name will be listed last name, first initial. The last name will be listed as it appears in the common working file and how it appears on the insurance verification. And all claims are listed on the RA alphabetically and then chronologically. ICN number, internal control number. This is a 14-digit number that is assigned to the claim by your MAC and is unique to each claim. The MAC uses it to track and monitor your claims within their system. Next, claim number, claim status. The claim number field reflects the claim number assigned by PC Print to each claim. They are numbered successively. The
Successively.
successfully. The first claim is number 1, the second claim number 2, and third claim, and so on. The next field, claim status, indicates the payment result that was determined when the claim completed processing. The remittance advice manual has a list of these status codes and their explanations if you think you need them, but almost all your claims are going to be primary and have a status 1, so you may rarely need to refer to the status code list. Now, if the beneficiary's name has changed during the process of the claim, it will be indicated with the code in this field. Normally, you will see a QC, but if the name did change, then you will see a code 74 in the name change field.
Name changes can often occur if there's due to a change in marriage or by marriage or a legal name change. That's when you're going to see these. Sometimes that happens. You know, a lot of our patients are senior citizens, and if you know, one is a decedent and they remarry, then that might change.
Thank you, Mary. National Provider ID. This is the NPI, or the National Provider Identifier of the facility that it is receiving the ERA. Okay, column 2 now. Patient control number. The patient control number is the claim number that was assigned by the provider and submitted on the claim. It's generated by your billing software. This is the number that your software will be looking for to identify your patient when you are electronically posting your payments. Now, the HIC number. HIC stands for Health Insurance Claim. This is the Medicare number of the beneficiary for whom the claim was processed.
In Alex, in 2018, this just started this year, Medicare is issuing new Medicare cards to all of the members. They're getting away from using the Social Security number as part of their number, which is part of the HIC number, and they're going with, they're being called now, instead of HIC, they're MIB, and it will be a combination of letters and numbers that are uniquely identifying those individuals. They're trying to reduce the opportunity for identity theft. So they're in the process of issuing new cards, and they're doing it by region. So that can affect your billing, and it can affect some of the, if you have any third-party softwares where you're receiving payment information on those claims, the original claim may have gone out with the old HIC number, but the remittance is coming in with the new MIB number. So sometimes those reports on those third-party softwares might be having some kind of conflict. So if you're having a posting issue or your electronic posting is becoming glitchy, that might be part of the problem. But as a provider, I'm sure you're aware of it, and Medicare is recommending not to be actually submitting claims with the new numbers until you've been confirmed that the patient did receive the actual new card. But the remittance are going to be coming in if the new number has been assigned, even if they haven't received their card yet.
Great, thank you. Medical record number. The medical record number is a number submitted on the claim that has been assigned by providers as part of their own internal record keeping. This is the ID number you assigned your patient. HIC change, like the name change. If there has been a change to the beneficiary's HIC number during the processing of the claim, it is indicated here by a code. You should see this happens in 2018 as patients are converted to the new IDs, as Mary had mentioned earlier. The TOB, this field indicates the type of bill that the claim data reflects. It is important to determine the type of payment you have received and if you need to follow up on any irregularities in your claim payments. Now, column 3. This is the start date of service processed on the claim from date. through date, this is the last date of the service on the process claim. If the claim is a wrap, 322, the from and through date will be the same. If it is a final, 329, the from and through dates will generally be different. Now, the CVLN covered lines. This field indicates the number of covered lines billed on the claim for finals. It shows the number of visits that were processed for payment on claim. If your claim is a wrap, or if your claim has been denied, rejected, or canceled, there will be a 0 in this field. Now, we're on column 4. This field applied to the Medicare cost report. For home health, no value is displayed in these fields. So you will always be a 0 there. Now, column 5, reported changes, charges. This field shows the dollar amount of charges actually submitted on the claim. For wraps, this amount will always be 0. But for finals, the amount is your visit times your charge amount. So an example, if you had 6 nursing visits on your claim and your charges are $200 for each nursing visit, the amount in this field would be $1,200. But since home health payments are paid based on HIPS code calculation as opposed to the actual number of visits submitted on your claim, this field is informational but does not impact your payment. Non-covered denied. This field identifies the dollar amount of non-covered or denied charges. It is almost always 0. You are most likely only going to see a value in this field if your claim is an outlier. Claim level adjustment. Like the previous fields, the amount you see in this field also reflects outlier payments or adjustment information. Otherwise, the value is always 0. Covered charges. This field displays the dollar amount of the covered charges. If all submitted visits are covered, then this amount is the same as the amount in the reported. Now the charges field on the first line. If any of the visits are not covered, denied, or reduced, then this amount will be different from the reported charges field. But again, this is an informational field, but does not affect your payment calculation. Now, column 6, this field represents the number of days or visits by each discipline listed on the claim. For both columns 6 and 7, you will only see a value in this field on final claims. Now, skilled nurse days, the number of skilled nursing days, the PT day, the number of physical therapy days, ST, the number of speech therapy days, and OT, the number of occupational therapist days.
Alex, on these, the days for home care, it's actually visits. For a hospice remit, it would be the days. So even though the header says days, those are actual visits, visit counts.
Now, column 7, more of the same, the number of medical social worker visits, the number of nurses aid visits. Now, the next one, co-insurance amount. If Medicare is the primary payer for your patient at this time, there are no co-insurance amounts for home health. Now, column 8, most of the information in these fields do not apply to home health. The only thing you may want to notice is the MSP PRI pay, Medicare secondary payer primary payer amount. An amount only shows in this field when Medicare is the secondary payer and the primary insurance has made payment toward the service on this claim. Column 9 is basically for Medicare's internal accounting purposes. As you know, non-home health providers get paid by the visit or service. Home health is episodic. So column 9 is Medicare's internal computation to go from per visit charges, column 5, to episodic payment. This has no impact on the agency's reimbursement. Okay, column 10, the good stuff. Interest. Medicare will pay interest on clean claims that have been submitted timely, but not paid in a timely manner. The value in this field is the Medicare's interest payment.
That can happen when Medicare has a glitch in their system and they've delayed payment due to some kind of software problem on their end or whatever. They don't pay interest on a claim if you wait 9 months from the date of service, submit the claim, and then it pays under the normal turnaround time from Medicare. That is not interest because Medicare did not receive it. So it's only when Medicare has received the payment and hasn't issued or received the claim and has not issued payment within 30 days due to problems on their end.
Okay, now PAT refund stands for patient refund and deductibles. The next two fields indicate an amount a provider owes the beneficiary for overpaid deductible or coinsurance. There are no copays and deductibles for Medicare primary claims for home health. So these fields should always be zero. And then finally, ta-da, the net reimbursement. This is the actual payment or adjustment amount for the claim that was processed. Okay, we've defined all the data fields. So now we're going to take a look at some sample remittance advice we made up to show you different payment scenarios. We are actually going to look at 3 sample remittance advices. So looking at the first patient listed, we are going to be concentrating on all the fields with values using the information we just reviewed in the headers to determine how the payment was processed. So once again, we're going to start the information in column 1. Okay, the first claim is for patient Bogart, which is the patient's last name. H is the initial for the first name. On the next line is the 14-digit internal control number assigned by the MAC. The claim number is 1, which tells us this is the first claim on the remit. Claim status also has 1, which tells us that Medicare is the primary payer for the claim. Under name, change QC indicates that there has been no changes to the patient's name during the time the claim was processed. If there had been a name change, the QC would instead be a 74. And after that is the agency's NPI number. On line 1 is the control number, which is usually generated by billing software. Line 2 is the patient's Medicare number. Line 3 is the medical record number that you assigned the patient. Line 4 tells us there has been no change to the Medicare number. If the number had changed during a process, you would see a C in this field instead of a HN. The TOB is 322, so we know this claim is a wrap. The from and through date on this wrap is 140621 through 14062, which is June 21st, 2014 through June 21st, 2014. Medicare lists the claim date in year, month, day format. So this wrap for the date of service, again, is June 21st, 2014. As I said before, for wraps, the from and through date will always be the same date. For finals, there will be a different date range. The last line, the CVLN covered lines field, has a 0 in it as well. It will always be a 0 on a wrap because we don't bill visits on wraps. There is nothing in column 4 because it doesn't relate to home health. There is no reported charges amount in this field, we do not bill charges on wraps for column 5. And since there are no reported charges, the rest of the field in column 5 are zeros as well. Now, columns 6 and 7, once again, we do not bill visits on wraps, since all the fields for columns 6 and 7 relate to the number of visits per discipline. These fields will be zero. And there is no co-insurance amount for Medicare, so that field is zero as well. Column 8, we said doesn't apply to home health. Column 9, we said is a Medicare internal calculation. And then finally, that brings us to column 10. There is no interest paid on this claim, no patient refund, and no deductibles. So the net reimbursement on your payment for the wrap is $1,263.65. All right, so that's one scenario of a wrap payment. Now, let's look at what we at TAD call a Z liability wrap payment. The next claim you see, claim 2, is for patient Davis B, which is also a wrap. Don't worry, we're not going to review all the detail again, but I do want to bring your attention to the net reimbursement, which is this case is a zero in column 10. Medicare has clearly processed the claim, but with no payment. When you see a wrap with a zero payment, this means that there is an open liability policy. When you see these zero payment wraps, Medicare is holding your payment until the final has been billed to determine the primary payer. If Medicare is the primary, they will pay the claim in full when the final is submitted and processed.
One of the things you want to be aware and watch your remittance advices for, when you see these zero paid wraps, you might want to run a current eligibility on those patients just to make sure that nothing has changed on their insurance eligibility. If there was an open workman's comp policy or something along that line, you might need to get additional information regarding those injuries to make sure that the care you're providing is not related to those open liabilities. Another reason you might have a zero payment on your 322s, your wraps, is if you're on a penalty withhold for Medicare. Certain MACs are now reviewing, Palmetto started looking at this a couple years ago, NGS is starting to look at it more recently, that if your agency has a practice of delaying final billing and you have a lot of auto cancels where the wrap reverses, you're going to find yourself subjected to a penalty where Medicare will process your wraps as good claims but not pay you until you get the final billing. If that scenario happens to you, you're going to receive notification from Medicare before that happens. And then you're going to need to start improving your practices on getting those final bills out in a more timely manner.
True. Now, our next scenario is a 328 payment reversal. Claim number 3 is for patient Durante J. This is the TOB 328, which we know is a recoupment or take back of a payment. Notice the date range in column 3. The from and through date are the same, so we know this is a wrap reversal. This next claim, claim 4, is once again for the same patient, Durante J, but this is a final claim or a 328.
29.
Or 329, sorry, 329. Notice the date. The final has the same from date, but the through date is different. Now, the covered line, the CVLN field in column 3, has a value of 32. That means there were 32 visits processed on this claim. Under skilled nurse visits and patient visits in column 6, we see there were 14 skilled nurse visits and 18 PT visits, totaling the 32 visits that were covered. So in total, this episode paid in column 10 is $5,751.21. These two claims together are an example how a wrap payment is reversed when a final claim is paid by Medicare. Every time you bill a final claim, you should see a correspondence 328 type of bill for the same date of service. The only exception to that rule would be no wrap LUPA.
So again, just to reiterate, the actual cash flow for this payment, for that episode for Jay Durante, the full payment of the episode was the $5,700 and change. But on this particular remit, you're only receiving the $3,000 because you've already previously received the wrap.
Now, the last claim, claim number 5 on this remittance advice is for patient Monroe M. This claim is also a 328, but this time there is no corresponding final claim. This is a wrap that has either been taken back because the final was not or has not been billed within the 120-day window or was canceled by the provider. Most of the time, these wrap reversals are the primary reason you end up with remittance that have negative balances, which is why it is so important that you bill in a timely manner. You'll want to rebuild the reversed wraps, making any necessary corrections before the final claims will be processed. Okay, our next sample remittance advice, number 2. These first two claims are an example of how a 327 or a provider adjustment is processed. The first entry we see on remittance 2 is another TOB 328 or reversal. Claim number 1 is for patient Martin D in the amount of negative $3,180.37 for data service January 5th, 2014 through February 18th, 2014. The from and through date have a date span, so we know this is a reversal of a final claim payment. Now, look at that claim number 2 right below this one. It is for the same patient, Martin, and the same date of service, but the TOB is 327. When a 327 adjustment claim is processed by Medicare, they first reverse the original payment and replace it with the payment shown on the 327. This is a claim that was adjusted by the provider. Sometimes it's hard to tell why a claim was adjusted by looking at the remittance advice, but in this case, take a look at the 327 again. When we compare it to the 328 right above it, which is what was reported on the original final, the skilled nurse and PT visits in column 6 have remained the same, but under the MS visits in the column 7, it now has an 8. So we know that 8 visits were added to the claim for the MSW. The net reimbursement is the same, so in this case, the change did not result in a change to the payment. But if the added visits had been therapy visits, the payment would have very likely increased, which is why you should always adjust your claims for accuracy. But it's especially important for therapies because it could net you more money for your episode payment. Now, a 32G or a 32I adjustment, the next two claims, Sinatra, are adjustments as well. But these are adjustments that Medicare has initiated. Now, we are looking at claim number 3 for patient Sinatra F. This claim is another reversal of a final claim. Just like the claim for Martin above, Medicare will first reverse the 328 original payment and replace it with the adjusted 32G and 32I type of bill. So once again, notice the date range in column 3. Medicare is reversing a final claim in the amount of negative $1,925.72. The next claim, claim number 4, Sinatra, you see is a 32I. We can't tell by looking at this remittance why Medicare made the change to this claim. However, the net reimbursement has changed from $1,925.72 to $1,987.72. This change was initiated by Medicare based on their information on the final claim and other internal edits. What we can see is that there has been no change in therapy visits, so the edit was for other Medicare review. As it turns out, this payment was adjusted due to episode timing. Medicare changed the episode timing from a late episode to an early episode, which changed the payment amount. PEP or partial episode payments. The last two entries on this remittance, claims 5 and 6, are for patient Wayne J, and this is an example of PEP payment. PEP stands for partial episode payment. The 328 shows a RAP reversal in the amount of negative $1,193.29. Yet the next claim, the final claim, has a net reimbursement of only $383.57. At first glance, you might think this is a LUPA because of the payment is so low, but take a look under the skilled nurse column, SN column 6. If this was a LUPA, there would be 4 visits or less. The fact that there are 16 visits or days on this claim and date arranged that is less than 60 days tells us that this is a partial episode payment. In this case, the PEP payment was determined prior to the final payment being made. So this PEP was processed as a 329 instead of being adjusted after payment as a 32G or 32I. Sample remittance number 3. 329 outlier payment. Now, we're looking at patient Gable. See, the first 2 entries on this remit are an example of an outlier payment. Once again, we have a 328, another RAP reversal. Nothing new there. Now, take a look at the 329 below it. The net reimbursement of this claim is $13,680.18. Take a look at the number of covered visits in the claim in column 3 through
3. It's 158 visits.
158 visits. The total charges reported in column 5 are $24,330.90. Also in column 5, there is a claim adjustment in the amount of $8,050.93.
Understanding outliers can get a little bit complicated. We have another webinar specifically about outliers, how to determine whether your claims qualify for the outliers or not. And that webinar is currently also on our schedule on our website for a September seminar or webinar. So if that's an area that you feel you need additional training on, you can register right now to that webinar right through our website. Invitations will go out a couple of weeks before the broadcast date. With outliers, basically, those are the patients that need an excessive amount of care that lie outside of the normal case mix rankings. And Medicare will do the calculation of the regular episode value that you would receive for normal case mix. And then if it qualifies and you meet all the other criterias, they would do a price adjustment, increasing it for an add-on. And that portion of the add-on is what we call the outlier.
Thank you, Mary. Denial. The next claim entry, which is claim number 3, is an example of a denial. We are looking at a type of bill 320 for patient Crosby B. This is about as simple as it gets. For a 320, almost all the field values are 0, and that's because there is no payment. However, based on the date range, we do know that this was the rejection or denial of a RAP. Claims are often denied, and just like all the other disciplinaries are talked about today, a good biller will investigate rejections to determine the reason for that denial to determine if the claim can be corrected or appealed. Okay, a LUPA. And the very last claim we are going to look at today is claim number 4 for patient Hope B. This is an example of no wrap LUPA payment. We know it's a LUPA because there are only 2 skilled nurse visits processed on the claim, column 6, and there is not a wrap reversal associated with this claim. LUPAs are paid on per visit rate as opposed to HIPS code calculation. The next reimbursement on this claim is the amount of $222.68. So this claim was paid $111.34 per visit for the skilled nurse. We have reviewed all the claims on our 3 sample remittance advices for 3 consecutive billing cycles. So now let's look at how the payment information is reflected on the summary page. We're talking about the information you see on the first page of the remittance advice. The remittance advice summary page is pretty self-explanatory for the most part. On the left side is the provider information, the provider's name, address, and MPI. Below that is the check EFT number. This is the paper check number or electronic funds transfer number issued to the payment that was made to the provider. If you are receiving paper checks, this number will begin with 0. But if payment is issued through an EFT, the number will always begin with EFT. In this case, we have an electronic payment that was made under the EFT number 7654321. If you have a no-pay remittance advice, there will be a sequential number displayed in this field instead of a check number or EFT number. But we're going to get to that remittance summary number 2. The next section of this payment summary, the first line is the payment total. This is the actual dollar amount of the provider, what the provider receives. The total payment received by the provider for this remittance advice is $2,837.24. In the next field, you'll see total claims. This field indicates the total number of claims that were processed on the remittance. This remittance had total 5 claims. Next, the billing cycle. This is the date that the claim activity took place and the payment was processed. Depending on your bank, you may see these funds in the account the same day or up to 2 days after this date. Now, the total PIP claims. PIP stands for periodic interim payments. This only applies to providers that have elected to receive PIPs and doesn't pertain to home health. So that field is 0. The information you see at the bottom has to do with the MAC identifiers and not relative to your payment. The information in these fields is usually blank. So for this remittance, the payment summary tells us that 5 claims were processed on December 1st, 2014, and a check was issued to the provider in the amount of $2,837.24. The detail pages activity should add up to the payment and any financial adjustments. Now, let's look at the summary page for our second remittance. The basic provider information is the same, but this remittance advice has different fields than the previous remittance. In the check EFT number field, there is now remit 00208 instead of a check or EFT number. This indicates that no payment was issued to the provider. Under payment total, you see there are zeros. That can't be good. The processing date is December 2nd, 2014, and we can see that there were a total of 6 claims processed. So now we have a new section called financial adjustments. Under financial adjustments, you see FB 21226801824907 MIR. This is followed by 6749, and then to the far right you see a negative balance of $747.72. When financial adjustments have been made to your claims, the adjustments are listed with corresponding reason codes that are used to identify or clarify the reason for that adjustment. For instance, the code for this adjustment is FB for forwarding balance. The number of following are just reference numbers for tracking the adjustment. The first number is the ICN, which stands for internal control number assigned by the MAC to the claim. And that's followed by the patient control number, which is the patient ID number you assign to the patient. These numbers indicate which claim on the remit is being cited for adjustment. The negative $747.72 to the right is an amount being withheld. Now, just like on the first remit, the detail will equal the payment in the final adjustment, financial adjustment. So there is no payment on this remit, and Medicare will be recouping the $747.72 from the future payment until they have satisfied the debt or tax levy or any penalty withholdings. Finally, let's look at the remittance summary number 3. You could see we're back to a positive balance of $9,777.59. We still have a financial adjustment, but with a new code. This time the code is WO, and the amount of the financial adjustment field is positive $747.72. WO is the code that stands for withhold. This code and the positive adjustment tell us that Medicare has recouped the money you owed them from the previous remit. If there had been a very large balance that was owed, and that balance couldn't have been satisfied by the payments on this remittance, Medicare will continue to recoup payments from future remittance advices until all negative balance have been satisfied. In other words, Medicare gets their money before you get yours. For this remittance, you were to add all the net reimbursements amount that would actually equal $10,525.31. Medicare has taken the $747.72 you owe them and paid you the difference, which is the $9,777.59 payment total you received on this remit.
Just a couple of other situations where you might have other codes on those financial adjustments. You mentioned tax levy or penalty withholds. If you have a tax levy, that's when you owe the IRS funds. They will garnish your remittance advices. Those payments are being used and diverted to pay your liability, your tax liability and debt. So those will not be reversed. You will not recover that money. That money is just being repurposed. It could have been a positive remit. It paid the $5,000 in claims, but they're taking that money and paying your liability debt. If it's a penalty withhold, like for instance, you failed to submit your credit balance report in a timely manner, or your cost report was late, or something along that line, they're going to hold those positive monies until they receive the credit balance report or have reviewed and approved your cost report. And then at that time, they will release all of those funds to you. So a penalty withhold is not a permanent reduction in your payment. It's just a delay in your payment. A tax levy is truly taking that money to pay your IRS debt. The other situation, we talked only about the Medicare remittance advices for Medicare. Any of the other remittance advices will be could be presented in a little bit different format, but the information should still be the same. You should have your from and through dates, your type of bills, your net reimbursement. Sometimes they'll do an allowable, non-allowable, this is the amount billed, this is what's allowable. So there's different types of ways to present the same information. And we will it would take all day to go to every payer because every payer presents it slightly different. As we expand into this, we're at an hour right now, so to go into all the other commercials, remittance advices, we would be here for a lot longer. But we'd be happy to answer any questions, or if you're interested in any services that TAD has, we'd be happy to talk with you about the billing services that we provide, the accounting services that we provide, um, and go from there. And Bonnie, I'm sorry that you lost connection during the webinar. I can send you an email and answer the situation that you're asking. But it does, personally, we don't need to delay our viewers now. So as you heard today, we have a lot to learn about Medicare remittance advices. And if you are not already one of our clients, we would love to assist you with your accounting and billing needs. The professionals at TAD have been providing accounting and billing services to home health agencies for over 15 years and doing tax work for over 30 years, all in the home care industry. So often agencies are owned and managed by clinical professionals who struggle to keep up with the constantly changing Medicare and IRS regulations. At TAD, all we do is home health accounting, billing, and tax work so that agencies are free to focus on the clinical and daily operations of their business. So we would be happy to partner with you and to discuss how you can benefit from TAD services. So feel free, all of our contact information is right there, our website. You can send me an email or the phone and extension, our Mind Direct extension. I'd be happy to talk with you about our services. So again, thank you again for attending, and please don't forget to fill out the questionnaire as that comes in. Thank you and have a good afternoon.